Ed Mines. Good morning, Eric Northport, Woodchopper. You're on my list this morning. All right, bud. Bring your own headphones tomorrow. We're going to be listening to Psycho Killer. It's going to be good. All right. Let's dig into it. So key things today. We'll talk about momentum, what it means, everything that comes with it. The runner at 9 o'clock as usual. Little trading energy 101. We're going to talk about overbought, oversold, what you're looking for, and how this is all going to set up. We were bullish on energy on Friday. We had a switch on our signal. We were talking about names like Pump, which are up this morning. Pump was on our runner list. Right? You get ahead of the curve. You got to stay ahead of everybody else because everybody in the world right now seems to be an expert in Venezuelan oil markets. We will walk you through it. Why are you with us today? Because, well, that pop this morning that we saw on some of these E&P names, upstream oil and gas, is already starting to fade a little bit. And I'm going to tell you right now, because I basically spent way too much of my mid-20s as an oil flow analyst and as a midstream pipeline person, understanding where energy comes from and how long it takes to get out of the ground. This is going to take a very long time for the United States to bring capital and cash to markets to make Venezuela viable as an energy producer once again. And the other thing about this, we might be 2 administrations away from the point where barrels a day of production. So let's not get ahead of our skis. Let's talk about what can happen on a day like that. We could see some selling, profit taking. Remember, the point of a market is to sell, and energy was coming out of oversold in late December. So right now, everybody's an expert in it, everybody. Everybody knows something about the viscosity of Venezuelan crude oil. Yeah, write that word down, viscosity. And the key thing to keep in mind is when everybody gets excited and this hits the headlines in Barron's, hedge funds sell right into that pressure. You don't think they didn't want to buy for $1 and sell for $2? That's the whole point of a market. S&P 500 momentum on the even end for our momentum reading. And yeesh, you know, it's just not there. And Secret Agent Charlie, you know where we're going to start the day. The FNGD has pulled back a little bit this morning, but we are still above our 50-day moving average, which means there's a little bit of stress in that Mag 7 stock world. There is that, capacity for people to be ignoring that we had $100 billion in reverse repo last week, that we still have some jitters in the financial world. We still have concerns about reserves in the banks. We still have the Fed providing repo support. There are questions about Europe. There are questions about Japan. We are not out of the woods by any means, and we are coming out of oversold, on the energy side not too long ago. Mag 7 topping, hitting that 100-day EMA, FNGD, and has pulled back a little bit. This is good, but you still have to be a little bit cautious in this environment. Russell 2000 still red. And the big question is, where is money going to rotate? On Friday, we did see some strength and some support and some flow into the Russell. But the Russell is still kind of capped to the upside, right on that 2,600 level. And as we discussed last week when talking about the concept of liquidity, of capital, and the flow of money in the markets, it's still not there. There's no big injection coming at any point. In fact, the rate of these injections, the rate of the support is expected to slow down. So sideways trading can be the norm, which is why it's important to learn these ranges, to learn about RSI and MFI, to listen to what Blake is talking about with monkey bars, to listen to what Don is talking about with expected moves. These are the way that this market is likely to behave this year. Not one of these events where we just get a big injection of capital or we have a big policy change and then we just burn higher for months. We're talking sideways action, and in many ways, kind of a comparable environment. Go back to like 2021 when the Russell just basically did this for months and months and months? Well, bulls and bears don't like this, but traders do, because you have ranges, you have oversold, you have these squeezes, you have moves that you can make money on if you understand the technical elements of the market. But if you're trying to go one direction, you're going to bang your head against the wall a lot this year in 2026, I assure you. All right, so as we move into the big story of the day, what do you think it is? On a scale of, I'm going to give you a couple of things. This is like an Oscar, right, where the Oscar competition is like Leonardo DiCaprio against Gary Busey, Ace Ventura as Ace Ventura. And then let's go with the guy who was Freddy Krueger. Who do you think is going to win? Well, story of the day is Chevron and Maduro, and you don't need me to provide you too much commentary on this. I'm not going to take a political stance on this. You can go anywhere you want and find somebody who has a hot take on Nicolas Maduro. And I'm not that guy. I'm here to try to figure out how to make money on it. Pretty simple, right? I'm not here to provide you with any commentary that you want to hear or disagree with. I'm just here to tell you that right now, the United States has redrawn the energy map in the global markets in a very dramatic way. Now, whether or not this play is going to work out, I don't know. But I will tell you right now, from a policy perspective, what this does is it changes the expectations and relationships of the financial markets and the global energy markets. Why is this so critical? Well, I'm going to tell you pretty simply. Yes, there's the geopolitical premium that is being felt in energy today. You're seeing oil move higher today. That is a geopolitical element to it. You're going to hear CNBC tell you that the reason that oil is up is because of Venezuela. And I'm going to tell you that's BS. The reason that oil is up today, the real reason, is because OPEC got together yesterday. OPEC is the producing nations, and OPEC plus, the 8 countries that actually make decisions, agreed to hold the line on their production. OPEC plus, which is the old school OPEC, including Venezuela, by the way, and then Russia and a handful of other nations, all agreeing that in the first quarter, they were not going to change their production capacity. They were not going to increase their output. And that's actually bullish. If they would have changed it, it would have been bearish. The fact that they commit to not raising production leads to the expectation and the follow-through that squeezes and the short covering can continue in this market. That's good for upstream E&P. It's good for names like Occidental. It's good for names like Chevron. It's good for everything in the XLE. We saw this happen on Friday. We talked about it on Friday. We saw the ERY break out, or forgive me, ERX break out on Friday. Now, I don't believe that traders had an inkling of what was going to be going down in Venezuela. It's not plausible. But I will say that the timing is very fortuitous for anyone who was a trader focusing on upstream oil and gas, because if you held through Friday and you went into Monday, and it was a very difficult thing, by the way, to hold through Friday on energy, you were rewarded today. Sometimes it's better to be lucky than good. But this is the key thing to keep in mind. The stuff that's happening in Venezuela is going to take years, and it's not even a guarantee that it's even plausible. I can't even begin to describe to you how difficult it is to pull that crude out of the ground. It is a completely different type of crude. It is very high sulfur. You have to blend it at the location before you can even move it through a pipeline. That is the level of thickness, and that is how you need to have the intelligence there. That's the benefit for Chevron. Why is Chevron up this morning? Chevron stayed when when Hugo Chavez nationalized the industry back in 2007. And EOG left, COP left, Exxon left. They all sued. They got billions of dollars. Venezuela never paid them. Chevron stayed and got paid in oil. Chevron knows the engineers. They know the terrain. They know the energy space. And the expectation is they get first crack. But it ain't going to be an easy process, and it's going to cost tens of billions of dollars. Some of these wells can fall into disrepair in like 3 weeks. You have to completely re-drill everything if you haven't touched a well in 6 months. It's very unique. It's very difficult. The terrain is more difficult than what goes on up in the tar sands in Alberta. So just so you know, yes, names like Valero are going to do quite well. The companies that are in the PAD 3 is where the U.S. operates its major refinery network down along the Gulf Coast. These refineries were effectively created to refine heavy crude from places like Venezuela and the tar sands up in Alberta. But again, it's going to take a very long time to get this stuff out and into the marketplace. Chevron produces about 200,000 to 250,000 barrels of crude a day down in Venezuela. That's about 25% of total output. And once again, it all has to be decoupled. There's going to be court cases. There's going to be a whole raft of things. And once again, this place is not politically stable, and it's not going to be for some period of time. So there's going to be a lot of speculation around this, and I still think you got to pay very close attention to how you trade this. Watch names like Valero. There can get some momentum, but the moment that they both move into overbought on RSI and MFI, that's where profit taking will be. And that's where there's going to be an opportunity to go to the short side. I'm telling you, don't be shocked if Barron's is writing about the winners and the losers of this on Saturday, and the winners lose and the losers win, because by the time that the news comes out and the time that there's the excitement, it'll have been done. The price movement has already happened. It happened on Friday, and it happened in pre-market today. All right, on top of this, real quick, tech leading today. ASML has been named as a top pick by a variety of different institutions. Big move higher. We've been very long ASML for quite some time. Natural monopoly, foundry business, another move higher. And the thing about a name like this, you hear people, I'll talk about stuff all the time where I will make a recommendation on a stock when it's sitting near a 52-week high or an all-time high, and it will still pull back. And people will say, well, you're wrong about that. Well, the reality is you got to let the market expectations kind of shift a little bit. You got to move to oversold. The things that I talk about when it comes to some of these bigger trends are long-term 2, 3, 4, 5-year trades. So you got to be patient with this stuff, and you got to ride through it. A name like ASML can rise and fall 25% in a period of 3 weeks. It is going to ride the tails of liquidity. It's going to ride the tails of momentum, and it can turn right back around and hurt you. This is why it's important to watch the MACD and to watch the MFI and the RFI. Buy on weakness, sell on strength, take profits as they come. Watch NVIDIA, Taiwan Semiconductor, the NQ as well. Copper is confirmed as a breakout for this year. I've talked about this. This is all coming from the top banks that are now talking about what their top trades of the year are. They all herd around the same stuff. They're usually right. But once again, the copper story, I have said, is less around AI and more about what is happening with China in 2026. China is going to engage in stimulus. That is beneficial for materials, commodities, anything linked to manufacturing. When China stimulates, it's bullish for materials. They are a manufacturing economy. When the United States stimulates, it's good for banks because we are a financialized economy. Gold continuing to move higher, silver continuing to move higher, and everybody's got an opinion on gold and silver. The Haven bid has returned with the full risk off. Look, as we look at this right now, gold moving to 44.26, silver back at 75. I think you've got a floor here somewhere around 70 on silver. So if you're looking at some of these funds selling spreads to the downside around that $65 to $60 level, wherever that adjustment would be for pricing, looking at names like Newmont, looking at anybody that's silver adjacent, right now in this environment, recognize there's going to be a lot of volatility. There's going to be a lot of chop. But if you want to take what the market is giving you, you don't have to chase this stuff to the upside. You sell put spreads to the downside. We're going to do a 101 on this today on trading strategies, the more conservative strategies for the year ahead. Finally, before we get to the runner, the ISM check, that is our macro reality check. Growth versus a geopolitical stress test. Once again, a weak ISM will support the golden duration trade in terms of bonds, and a strong one keeps the tech leadership intact, keeps that narrative going about growth. Once again, I don't subscribe to this, but I will simply state the rest of the market still believes that it's 1997, so therefore we have to trade in a 1997 mentality when it comes to the relationship between the economy and the stock market. All right, where are you, Sir Charlie? Sir Charlie, you've been knighted. I've switched away from espresso, New Year's thing. Big decision. That coffee was working, but it was terrible. Oh, boy. You know, this is adorable. It's just look at that. Look at that guy. Little Macy stock. Jeez, we're off to the races this year, aren't we? It's like, hey, guys, what do you got? What's your number one breakout stock for Monday morning, right after we get back? No, it's not ASML. It's Macy's. I'm just telling you, this is just our data feed. So blame the algo, blame the models. We start out with the most electrifying brand in all of America, Macy's. If you haven't been to a Macy's, is there still a Macy's? There's got to be one at Towson Town Mall. It's got to still be there. So there you go. You can buy some clothes. They'll rip right away. Just pure paper. Good for business. You know, this is one of those conservative plays, and it's funny because the thing about Macy's is that as much crap as we give it, it really is a pretty solid real estate play and an actual interesting little, is it a debasement type of play? I mean, at the end of the day, this is a stock that is still trading 1.4 times book value, still holding the line a little bit. If you're going to trade it, the key way to do it would just be to focus on what the market is giving you. And what the market is giving you in this environment is out into February. Out into February, you can do something as simple as buying the 20, selling the 18. It's going to give you a 10% return, 85% probability of profit. It's going to be down here. But what's interesting about that is this is already a stock paying 3.2%. In a relatively conservative environment, 2018 put spread, it's not going to pay a lot. I get it. But it's just the continuation. If you want to then turn around, take that $18, $20 that you can generate, buy a call on this. Go long call, because if momentum starts to return to this market, Macy's does have upside, and the upside takes us somewhere back to that 24 level. So if you go out to January and you're looking for a little bit of a lotto ticket, you got earnings coming up, but you could trade it into earnings. The January 23rd 2250 is currently trading at about 95 cents. Or you go even further and you go out to that 2350 call, currently trading for about 54. 30% probability of profit, but you keep a tight stop right back here at this key 20-day moving average. Electrifying. WB is Weibo Corporation. I cannot tell you how much I love this stock. It is my favorite Chinese name that I have no idea what it does. But what I do know is that it is a fantastic momentum stock. And I do know that it fits the core tools of what I look for in a F-score, high F-score stock. So they're doing everything across the board that they're supposed to do. Low price to gram. Overall, cheap, right? 2.3 enterprise value to EBITDA, trading for 67 cents book. Look, That's nice. And when there are these tailwinds to a place like China, and when you have the congruence, was I really going to use that word? Not just use it, get it wrong. I like to speculate on Weibo. I like to trade this name, and I like to just set up a simple spread. Once again, I am bullish on China if they are going to be unleashing monetary stimulus coming from the bottom right now. That is going to provide support to their domestic economy, and I tell you, same thing happens there as it happens here. Money that is injected into their markets will also be turned around and speculated. It's supposed to go to domestic stability. It'll end up in the equity market. It'll 100% end up in the equity market. Clean way to trade this, if you want to just really keep it quiet, you go out to February and you look at the 10, 12, 50 call. You buy the $10 call for February 20th for about 88 to 90 cents. You sell the 12.50 call for about 15 cents. Now, you don't have to do the 15-cent thing, but I'm going to tell you why it is smart to do so. Because if you sell that call on top of that existing call that you purchase, if you buy the 10 here and you sell the call up here, it just gives you a little bit of cushion just in case this pulls back under its 50-day moving average. And it just reduces the stress of any downturn that comes in the event that the EMA, which is currently at 1044, if you drop down to about 1044, that's about a 15 to 20% loss. Really no harm, no foul there, but it just gives you, a little bit of cushion, a little bit of protection. But if you're doing that trade, and this is a trade that I'm going to do today, I'm buying that February 10 call. I'm selling the 12.50 call. It's going to cost me about 75 cents. That means my break even is 10.75. My cap is 12.65, which is right back at the recent highs, and we're out to February anyway. So the way that this sets up, about a $75 bet, max return on risk is about 175. That means my max return is 235%. Break even 1074, so 16 cents away. Probability of profit 44%. And if we got out to, let's just say February, I'm just going to throw February 1st. If we're at $11, that's a 36% gain. If by chance we're at 1150, it's an 86% gain, assuming no change in volatility. So we're looking for a rebuild now on WB. If we get stopped out, we get stopped out. We recharge again. The stock has done this over and over and over again. It's a great quality value momentum trade. There's your strong long for the day. On the short side, BSX, FTDR, Airbnb. I'm not going to be overly aggressive on the short side right now. I'm just simply paying very close attention to Airbnb. If it breaks back under that 20-day moving average, just keeping it on my radar, 131.91. Very good possibility that it taps that level today. You see this negative crossover here on the MACD. It is coming out of overbought. Typically where I am bearish, typically where I'm looking for profit taking and looking for a move back to that 126 level. Same thing applies here that we just did with Weibo. So instead of doing a call spread to the upside, you do a put spread. But when you're doing a put spread, you want to stay in the money with that put spread. So then that way you're reducing the possibility of losses in the event that it does just come back up, tick along this line, and just recovers. I don't know what the cyclicals are going to do. I don't know what the market is going to do. That's why I have to know what my statistical setup is before I make the trade. So if I go out a couple of weeks or 2 weeks or however long I want to go out, maybe I buy something like the 136 put. Okay, the 136 put for January 23rd is currently trading at about 478. That means that I would need this stock to get down to about 131.22. So right here to break even. Okay, but if I write that same period of time, if I write down around the, let's see, what's a little bit of a cleaner opportunity here. Maybe the 127, which is in line with some of these key moving averages. If I write the 136, if I buy the 136 and write the 127, I'm putting up $359. Okay? I'm putting up $359 for a break even at 132.41, which just so happens to be right around that 20-day moving average. If it cracks under that moving average and we start to move to the downside, and let's say we hit this 127 level right here, well, let's say that it does that within 4 or 5 days. That's about a 65% return. But if it bounces back to like 134, well, that's about a 12, 13, 14% loss. So I've got a lot more upside than downside here. And once again, that's the 136 for January 23rd, writing the 127 and looking to get under that moving average. If we can't get under that 20, the stock is not going to be successful. But I think you know that because you have eyes. BSX, app, FTDR. All right. There's your other moving parts. Last ones, I just want you to keep an eye on rig. We've been long rig for about a week and a half. We had a nice gain in our one of our final trades in our NVIDIA boot camp. $11 call, the $4 call for last Friday, finished up around 110, 125%. I said to people, if you want to take possession of the stock, take possession of the stock because we're moving toward breakout territory. And it carried on. We're moving toward oversold. I will note this. This is not just about what happened in Venezuela. It's about deep water contracts. And this is an important thing to keep in mind. It's not just the oil that is in the mountains of Venezuela. There is a lot of oil around the shelves, not just Venezuela, but Guyana, Cuba, and a lot of people are starting to look at Cuba now. All of that offshore drilling in those basins that have not been touched ever by human drills. 426 on rig up to 450. That is around my expected range. I was looking for 460 on this. Just keep this in mind when we get into overbought territory, RSI and MFI, that's where you're going to be going to look to try to fade to the other side. We're going to do NVIDIA, will be that, and then we're going to look at ERX real quick, and then I'll take some questions. But NVIDIA, continuation of trend, continued strength, momentum returning. Simplest way to trade this, buy in the money, 190 level, buy 192 level, selling up to the $200 level, looking to just do a simple call spread, looking for continuation until we get to overbought. Technology stocks are coming off the mat after that sell-off recently, and it's just a reminder that good things happen on the other side of the 50 and the 20-day moving averages for names like NVIDIA. We're seeing the strength return. You're starting to see some of the Mag 7 stocks get off the ground a little bit. It's going to be very, very difficult, of course. You've got Netflix and some of those other names are still under some stress, but Tesla and NVIDIA are taking this market higher. The AI trade is clearly not over yet. SOL is also ripping. Hit refresh. Garrett is gone at my end. Well, that is said a lot about me. I understand. ERX, last thing for you, okay? So this is a gentle reminder about how the energy trading system works. What works? What doesn't? And what can you trade until it breaks? Okay? What can you trade until it breaks? I talk a lot about the OILU. This is the microsectors, oil and gas, exploration, production, 3X, leveraged, exchange traded note. That is way too long of a name for anything. That's insane. But it does what it says, right? Which I admire, right? Microsectors is the name of the company that actually creates the fund itself. Oil and gas, well, you know what that is. And if you don't, well, Google, YouTube, ask somebody. Try this. Just do this today. Even if it's a bit. Just go to a 7-Eleven that has a gas station. walk in and say, I'm running a private survey. I'm trying to learn about how things work in the world. Can you explain gasoline to me? And then just see what they do. Just try that. I do stuff like that because that's funny to me, even though there's not even a camera on me. It's just a good bit. I have to be doing bits all the time. So OILU, oil and gas, exploration and production. That is upstream. Exploration, they're looking for it. Production, they're producing it. These are the companies that actually own oil and gas. 3x leverage means 300% gain for every 100% return. So if the index that this is tracking goes up 1%, it aims to replicate that through derivatives, meaning using options and leverage. And then ETN is an exchange-traded note. Don't think about this too much or else you'll get a nosebleed. It is a bank promise. It is not an ETF. It is a promise. It is unsecured. There's nothing backing it. It's literally just derivatives. Okay, why does all of this matter? Because it's paper trading. It's paper trading. It's things trying to emulate the underlying contracts and the underlying assets to produce the returns that they need. They have to use leverage and they have to use derivative contracts. They have to use options. They have to attempt to replicate it on paper. And that can lead to wild swings. And remember, the paper market is much more dominant than the actual physical market ever will be. It is erratic, it is chaotic, it moves violently, but it still tends to follow rules. And people pay a very close attention to RSI and MFI. You do not need to be a master of trading the markets. If you can master, though, what RSI and MFI is telling you, you are ahead of 85% of retail traders. RSI is a one-dimensional momentum oscillator. It is telling you if price strength is getting stronger or weaker. When it gets to 70, it is considered overbought. Price is overbought. When it is 30 or less, it is considered oversold, meaning the sellers are exhausted. MFI measures price, but also incorporates volume into it. And that's important because a price rally without volume is thin and susceptible to sharp pullbacks very, very quickly. So what you're looking for on the OILU or the ERX, which is the double bull ETF for upstream oil, gas primarily, but there are names like Valero in here, which is downstream refineries. Don't get caught up on it. Don't worry about it. Just focus on the fact that the ERX is overbought or oversold. And when it gets overbought, recognize that that is the place where the buyers are exhausted and they are going to stop buying. And that is going to be a place where there may be an opportunity for profit taking and a reversal. And we are setting up for that probably, if not in the first 45 minutes of this trading session, then potentially later this week. So then what do you do? Well, once the ERX and once the OIOU are overbought or oversold, the XLE is likely going to be overbought, and you can potentially short the XLE, or you can start to look at some of the smaller names, the smaller energy names that are a little bit higher beta and will move quickly with these stocks. Apache is in that world. Devon is in that world. DVN is the ticker. So too is Occidental, Warren Buffett. And Oxy was up at 43.50 this morning and has pulled back to 42.94. I'm long Oxy, and I have been held at the mercy of these markets in the pre-market because I'm watching potential paper gains that could have been achieved up here start to dissipate right now. So I'm going to be exiting a position at around 9:30. But once again, the purpose of the market is to sell. So when you see these spikes that are happening this morning and you're wondering to yourself, well, wait a minute, why is it pulling back in the first couple of hours? It's because people are taking profits. That's the purpose of all of this. So once again, focus on the technicals. You can do this very cleanly, be contrarian, and have confidence by following those key behavioral elements. All right, 9:21. Don's coming up in a moment. I'll be back at 3 o'clock. Oh, man, what am I going to do with my time today? I can't wait. That is all I have for today. Any questions? Obviously, support at TheoTrade.com. Put Garrett in the subject line. I hope you all have a great trading day. Feels good to be healthy again. I will catch up with you all very soon. Take care.